Hey everybody, it's Monday. Hope you're doing well. It's Brian here for just a quick live update on what we're looking at this morning coming into the market. A little bit of craziness overnight, and we'll see we'll see what the day brings. Today's the 31st, by the way, 31st of August, so it's Monday, last day of the month. Got some stuff coming up this week that we want to be aware of. So what we're going to do is we're just going to run through a few things. I'm going to start with talking about what news is coming up, kind of some key points through the week that we want to be aware of. Then we'll jump into what's happening in forex, maybe some potential trade ideas there, and then over to futures. And there is something coming up this week that could actually be impactful to crypto. So we'll hit that. I probably hit that first. Anyway, so that's kind of the marching orders for the day. Check out this cool drawing over here in the background. My son changed it up over the weekend. I came into my office and he had a new drawing ready for me. He put into the corner there, so proud of him on that. Okay, let's go ahead and jump into what's happening in the markets. So this week, today, not a whole lot of news. I mean, it's a German bank holiday, so part of the probably a larger part actually of the euro traders have been off, but that doesn't really impact us coming into the U.S. session. That's what's happened has already happened, and that's really no biggie of what's out there. The things we want to be aware of this week are these items coming up over here. So tomorrow morning we have the manufacturing reports both in Canada and here in the US. This reporting will be fairly interesting to us. The vehicle sales come in through the day, but this is largely seen as a leading indicator. I don't think that vehicle sales will be down that much. I've seen it seems like I don't know. It seems like a lot of maybe poor decisions are being made right now by people without jobs. But at any rate, I think this will be all right. The biggies would be the manufacturing, PMI, construction spending. These are again they're reporting last month, but they're still kind of seen as what might be leading into the future, especially if these levels are declining. So that could be a potential market mover for us. Wednesday though, Wednesday we have the ADP non-farm employment change. So this is the precursor to non-farm payroll. That'll be watched pretty heavily. And then on Friday, down here we've got the actual non-farm employment reports and the unemployment rate report. So this is probably the most heavily watched news piece around. So that's a monthly pre-announced, pre-planned announcement. So this will be big. So it's Canada and the US are reporting first Friday of every month this comes out. So this will be something to really watch on Friday. Ahead of that, Thursday, I mentioned that there's something happening that might affect crypto. Bank of England, Governor Bailey is speaking about his future of crypto and future of stable coins. Depending on what, it'll probably be nothing, but depending on what's said and if there's any Q&A and any kind of lean towards trying to create policy around that, things that might restrict currencies or cryptocurrencies that could potentially be impactful. We'll see. I don't expect a whole lot from it, but just know it's there and it could create some volatility in that marketplace. All right, so switching gears, popping over to the forex side of things, just looking at what's happening over here. As the U.S. foreign exchange session has gotten started, it just started about 2 minutes ago. We're watching now to see which currencies are actually moving. We've got the pound that's been a weak currency for pretty much all morning, and as the new session has started off, we see the pound continuing to move to weakness. So I think the pound is a great currency to look at right here. The Canadian has been above the midpoint, still is above the midpoint, and looks to be pushing to strength. So we've got some nice divergence between the pound and the CAD over here. So that's a nice, interesting look for us. However, if we go to look at that on the pound CAD chart, it doesn't support the direction that we'd want to be trading in. We can see we've been kind of pushing down here for a bit. We'd want to see the pound continuing to push weaker. This pullback that we're seeing on the pound CAD that's displayed right here is evident as we see the two converging versus diverging. So we're seeing them converge here. So right now we have on our let me go back over here. So right now, I was showing. So the move up, would be displayed by this convergence where both are moving back towards the midpoint. So right now, we've got the Canadian here that's above the midpoint and looks to be diverging, back to the stronger side, and we've got the pound that is here below the midpoint and seems to be, moving to the weaker side here. What we don't have is on our chart is we're not seeing the volume detail flipping over. We'd really want to see the volume detail flipping to red, indicating that we've got volume that is supporting that continued selling of this currency pairing, right? We don't really have that, so that would tell us to stay away. The other thing with it, it's moved 95 pips basically for the day so far. Its average is about 120 to 130 pips, so there's definitely opportunity for movement there, and we're not really at that bottom, so even from here to here there's opportunity. So I'd say there's a lot of opportunity in this currency pairing. We just really need that volume detail to flip over for us. So what we might watch for here is to see if this currency pairing just kind of stays hovering kind of around where it opened. If eventually we get the volume detail flipping over to support selling, so this flips over to red, and it breaks through the bottom here, that would be our opportunity to look at that currency pairing as a sell. Beyond that, I don't really see anything else that's jumping out at me as a great potential trade. The Euro CAD is there, looking to buy. Let me go back over here. Looking to buy Euro, sell CAD, but that would require the Canadian to actually move down below this midpoint against the Euro. The Euro has been a very steady, stronger currency over the course of the trading day today. So, which began many hours ago. It's not just beginning here with the U.S. session. So there could be some opportunity there too if the Canadian rolls over and starts pushing weaker. That's only moved 65 pips on an average of 100. So that could potentially be something here, looking at the Euro versus the Canadian. But I think the better opportunity would be if this Canadian can stay above the midpoint and gives us that continued divergence from the pound. That would be where we'd want to look. Just kind of scanning through here to see if there's anything else that's really moved a fraction of what it typically moves. Not seeing much else out there. Potentially the U.S. versus the CAD. Again, U.S. would have to stay below this midpoint. CAD continuing to push higher would give us the opportunity to sell the USD versus the CAD. It's moved 40 pips. Its average is around 80. So is there opportunity to pick up that quick 20 pips on it? Yeah, I think there is, and certainly the volume detail is right now supporting that selling side of continuing to sell the USD. But let's give it a few minutes and see what shakes out of this. I'd rather look to the pound CAD, just simply because it's typically more volatile and it has maybe a better chance of giving us that quick hit that we'd like to get into. Okay, switching gears. Going over to the future side of things, what we're looking at over here is the S&P crude and gold, and of course the process is exactly the same as it always is. We're not looking to do anything new or get fancy with it. I did add some additional support resistance lines over here just to make up for these newer highs that we've been seeing over the course of last week. This move has just been parabolic, guys. It's really kind of crazy when you stop and think about where we are, where we've been. I have to go to a longer time frame. Where we are and where we've been with this. And even if you go back to like look at the move from where it was 2017 to now, it's just it's pretty crazy what we're looking at here. I mean, who knows how sustainable this is? It does not bode well, in my opinion. But folks don't ask my opinion, and as I've mentioned before, we don't trade our opinions. Trading our opinions can be a little bit dangerous and certainly very subjective, which does nothing for us for consistency. Subjectivity, is not a consistent trading plan. Opinion is not a consistent trading plan. We've got to have something that's got quantifiable reasons for doing what we do. And I know I sound like a broken record. I say it every day, but that's just how it is. You can have your opinion, and you can have your trade plan, and it's okay for those to be different, right? It's okay. So what we're looking for here is we'd be continuing to look at buy opportunities. We've got the 4-hour time period shows that we've got a long bias, so the bias is to the long side. The 30-minute here bias is also to the long side. Now, some would argue, hey, this is starting to roll over, and the green line is starting to trend down and converge on the red line here. Sure, maybe. I don't know. It doesn't matter, because what I'm looking for is if the red line has crossed above the green line, that tells me we're going short. If the green line is still above the red line, that tells me we're still looking to go long. It's very black and white. There's nothing to worry about trying to overanalyze and overinterpret what's happening here. Now, a lot can happen, leading up to the actual start of the regular trading hours. But until that happens, we're still looking at long opportunities. As long as these are in agreement, we're looking for long trading opportunities. What does that look like to us as a long trading opportunity? Well, a pullback would be the first one we could look for here. Is a pullback down to 3,500. So 3,500 was an area of resistance for us. Resistance, and then finally we broke above it on Friday and moved on. And so 3,500 would be a great spot to retest. My line here is at 34.92. So you've kind of got 3,500 as a top edge, 34.92 as a bottom edge of that support area. So we can certainly see price float down. It closed up here at 35.06 on Friday. We might just come back, retest this close, and then move on. I would expect if it gets to 35.06, it'll probably get closer to 3,500. But we'd still look for those buying opportunities until this flips over and tells us, hey, we've got a mixed bias here, and we're not really looking at that anymore. So we continue to look for buying opportunities on that. The other way to do it is what we talk about all the time, is as far as the regular trading plan, which is to wait for price to continue to make lower highs and lower lows, and then play a breakout of that previously closed candle. So there's another way to go about it. As far as just looking at highs and looking for breakout points, today I'd be a little, and even this week I'd be a little less likely to look at those. There's some pretty big news coming up this week that could be potential market drivers. So I would continue. I prefer to look for pullbacks unless we pull back to a level that we've got some pre-existing areas that we could trade from to look for breakouts on. So for now, I would say let's look for a pullback. Possibly retest 35.06 or down to even 3,500. This 34.92 is going to be kind of your area where if it breaks below that, you definitely want to bail out and let the market do what it's going to do, and then find a new potential entry point later on when everything gets back into agreement with its bias. So for right now, bias is long, looking for long trades, and we talked about what that would look like there. In crude's been hanging around 43. It's hitting its head at 43. It finally broke through it, came back, it retested it on Friday, and now we're back up here. Again, we're pushing above. The 4-hour bias is long, the 30-minute bias is long as well. So we'd be looking for long trading opportunities. A couple ways to look at that. One would be just a breakout. So if we break above 40, did I say 35? I meant 43. I think my brain was still stuck on the the S&P. I'm looking right at it, but I think my brain gave me the wrong number. So what we'd be watching here would be, for breaks. We'd be looking for long trading opportunities. Both are in agreement. We'd watch for long trades. And that could look like a couple of things for us. One, would be that break above 43.50. If you're just looking for a straight breakout in the direction of the trend, 43.50 would be your breakout area. For pullbacks, we'd be watching for things to pull back down here around 43.20, even back down to 4300. But 43.20 would probably be that first stop. If you want to dial it down a little bit more, 43.15. So you could probably watch, 43.15 is the top of that edge, and you'd be down here around 42.90 is the bottom of that edge if you're looking to trade within here. So if it gets in within that area, that's where we'd be looking for pullbacks to buy on a pullback. Of course, there is the other process, which is a great way to time an entry with no real stress around it, which is just wait for markets. As long as you're in agreement with your market bias, just wait for it to pull back, giving you lower highs and lower lows, and then watch for a break of that previously closed lower high. Super simple way to go without a lot of stress. Gold is technically back into a long bias. So gold had a pretty nice push on Friday. It stayed up pretty well so far. This morning in electronic trading, and we've got gold that's technically in a long bias. So the 4 hours a long bias, the 30 minutes in a long bias. So for gold, we're back to looking for long trading opportunities. And what could that look like? Well, pull back to 1970 right here, certainly a good area. Even a little further down at this 1960 would be a great spot to look to jump in if you're watching for pullbacks to go long. Breakouts would be above 1980. So if it breaks above 1980, which is a big level on the 4 hour over here, by the way. If we break above 1980, that certainly would be that long breakout, just at the top edge, break of the top edge, continuing long from there. So that would be what we're watching for gold. Of course, again, that same plan applies. We're in a long bias, so if we're pulling back and we're making lower highs and lower lows, we can trail our we can trail our entry off the top of that previously closed candle, showing the lower high, and put your stop loss at or below that previously closed lower low to see if we get a little push that could continue on in our favor to that long side. So that's really it. A big thing to take away, which is always the thing to take away, please trade with a stop. I say it all the time, and I'm surprised at how many traders still don't put stops in. Trade with a stop. It's going to help you. I can tell you from experience, if you don't trade with a stop, you're likely, it's probably for a couple of reasons, because you're emotionally attached to a trade, and you're likely to hold that for much longer than you should when you're just kind of, quote, winging it, right? You're trading without a stop. You're putting yourself in a position you can catch these volatile moves that just blow out one direction or the other, and then you're kind of stuck in it, and it creates this panic and this fear and a lot of other emotions that typically cause us to hold on for longer than we should into positions. When you're using stop losses, it means you've got a planned out trade. You've identified a point for your entry, you've identified a point for your stop loss, you've identified a point for your take profit, and you've got a complete trade that has a plan behind it. And if it moves down and it takes you out, that's okay. It just means the plan didn't work, and you can move on to the next plan and wait, to be patient, wait for the right setup. All the bad things that happen in trading, a lot of them start around not having stops in place, not having a plan in place for your trade. So please plan your trade and then stick to the plan. All right, so that's all I've got for the day. I'm gonna leave it here, and we'll catch you guys a little bit later on. I was just watching to see what's happening with the pound CAD is still right around the bottom of that. Oh, I'm pointing. Can't see what I'm pointing at. The pound CAD is still down at the bottom of that breakout box while we were talking over here. It has rolled where we've got the volume detail is now supporting that selling activity. So be a good spot to look potentially at continuing short on this pound versus the CAD, and you know, it still supports that sell of the pound here versus the CAD as well. So anyway, just for what it's worth, that started to stack up as a good potential entry. So does it mean it's going to be a positive trade? I don't know. No one knows. But it is giving us what we need to see in order to be able to get into a trade and give us a high probability of having that trade reduce risk and potentially move in our favor. So there you go. All right. Have a great day. Bye.